Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and today I am joined by an outstanding co-host who today will discuss a little bit of an important topic for all of us, and that's how to find funding for your startup. What do you need to know? Where should you be looking? And what is some advice from those who have invested or are investing? Well, today I am joined by my outstanding co-host, but I'll introduce him in just a moment. Big thank you to the Token team, to Maria and Hasmic for making today's episode possible. If you haven't done so already, please do check out VCTV on latoken.com to hear from today's speakers and all speakers of the VCTV family. With that, Peter, welcome. A little intro, a little background for everybody.
Hey, Kyle, how are you, buddy?
Doing well.
So I think we'll have a nice free flow of exchange of ideas and hopefully very helpful to your audience. As you mentioned, I'm Peter Plout. I'm the executive director of Weimer Family Office. We are a multi-billion, multi-family office based in London and Denmark. I also have a JV through my consulting firm with one of the largest private equity firms in the world, and we focus on providing capital to real estate developers, metals and mining companies, oil and gas companies, natural resources, alternative energy, telecommunications and satellite, and a whole host of others. I also am a frequent guest on your program here, Kyle. So always looking to help what I call the underdog, those that want to make it big, make it large, make a statement, helping in their branding and helping to attract capital. For the last 35 years, all I've done is pretty much as a matchmaker. I match those people that need capital with those that have it. And whether that capital is a small amount or it's a large amounts from institutional investors. So, my typical focus is 150 million to well over $1 billion. But, for VC, obviously, we're talking a few 100,000 to a few million. So why don't we start talking about how a startup could attract capital?
Absolutely. I mean, what's some of the advice that you have? So looking at some of these companies that you do as a family office, you probably see many different types of companies, all the way from the idea stage, all the way up through those that are pre-IPO or pre-public offering, and in some cases may already be public and are looking to be acquired through private equity and otherwise. What is some of the advice that you would have for those looking to find fundraising after seeing all these different companies?
I mean, it's interesting. We'll take it from a family office perspective, but let's just dumb it all the ways down to just me and you sitting here, as if you were the company looking for capital. So forget about the institutional investor capital, forget about the family office capital, forget about the Shark Tank, okay? And let's just dumb it down to just two people sitting in a room asking for capital. And that could be your friend, that could be somebody you know, or it could be, a presentation. It starts very simply with an idea, but the idea has to be backed up by a concrete business plan. And that business plan can't be just an idea of how you're going to sell a particular product. It has to have the backing of a serious management team. So it can't be just one person that's a director that's doing everything. It needs a management team in place that has the experience to take the company from startup through to a capital raise and then grow that base. And if it doesn't have that management team in place, at some point you need to think about that place. So it always starts initially with management, surrounding an idea, formulated by a concrete business plan. And that business plan needs to be taking into account not just the upside prospects, but also what happens in a downside scenario. You lose a key counterparty in the supply chain for your product. You lose a key customer. How is that diversified in terms of the supply chain onwards? So all those things start out with a key business plan. Once you have that business plan, Kyle, now let's talk about selling that idea. Again, two people sitting in a room. Why should I part with my capital to you? Why shouldn't I just take that capital? And it could be $100 and put it into Amazon stock or an Apple stock. How are you going to give me a better risk reward that's a return on the investment than me if I just put it into Amazon stock? Or if I don't want to take the bet on Amazon or Apple or something like that, a diversified portfolio of companies via an ETF, which is a relatively low cost investment strategy. So you're competing with professional money managers. You're competing with the best of the best stocks that are out there, as well as bond investments for that matter. How do you compete with that capital? That's the question that you fundamentally need to answer, whether you're sitting one-on-one or you're sitting in front of an institutional investor or a family office like myself. You need to be able to answer that question. And that starts with a concrete business plan, a concrete management team. You need to show yourself how you're going to add value. And that comes down to branding. Whether you're walking into a bar and you're going to pick up that hot girl at the end of the bar, or a hot guy, or whatever it happens to be, what's that pickup line? You need to add value right from the start in the first 30 seconds of that conversation. If you don't add value, nobody's going to listen to your idea. So that comes across as brand. How are you going to brand your particular idea or concept? Backed up by a management strategy, then backed up by an idea in terms of risk return.
So that's a lot of good points in there. I want to come back to value, and also throw a stat out there that I read over the weekend around fundraising size, and the current size of globally seed to series through the first half of this year. And we saw a 50% bump in round sizes last year over this year as well. So for instance, from a seed perspective, globally, the average was about 1.7 million as an average last year. This year, 2.5 million. Series A, 11. This year, 15. Series B, 27. Now over $40 million just through the first half of this year. We've seen this huge progression of bigger rounds raised at these early stages to get their companies off the ground. And this news comes from Crunchbase News, along with on Twitter as well. But Peter, what does this mean for the future of fundraising? As those companies are going out there to find funding, it seems like there's a lot more money out there right now being put into companies as again, companies are raising larger rounds. How does a company compete? Should an early stage company be looking to raise maybe more money than they normally would? Should they be expected to raise capital based on their projections? What are your thoughts as to how frothy the market is right now around capital and looking to go places?
Well, let's break that down. First of all, in terms of your statistics, we're talking about seed rounds, venture capital type of money. We're talking about not institutional investors, right? We're talking about here funding an idea or an actual business plan. So the first thing you've got to do is put together sources and uses of funds. Okay, what are the sources of the capital? Where's it coming from? If you're talking about 1.5 to 2.5 million plus, okay, we're not talking about institutional investors. We're talking about friends and family. We're not even talking about a family office at that point. So we're talking about the sourcing of the capital coming from friends and family, people possibly venture capital, but really starting off with a family office. Then we're talking about what are the uses, okay, of those funds. And you asked a very good question. Should we take on more capital because there's more capital available? There's always going to be lots of capital flushing around in the system. So the last thing you want to do is take more capital than you need and obviously dilute yourself. That's number one. Number two, you want to have in the first round, you want to have friends and family that believe in your growth, believe in your idea, okay? So that they're not looking to take a significant portion of the company that you're talking about. Once you get through that perspective, okay, then the question becomes is, who do you target? And at these type of rounds, you target friends and families. You talk about friends of friends, and then you might want to come up to some family offices. Now, a large family office, if you put down who's the top 20 family office in a particular region, they're unlikely to take your call. I'm unlikely to take the call from a significant investment point of view because I'm looking to deploy 150 million to over $1 billion. However, I'm more than happy, that's why I'm on this call, to help those people that just want to get started, have an idea, have a concrete business plan, help them refine that business plan, and then help them target the appropriate capital. But it's got to start from the beginning with friends and family, and it's got to then also discuss what is the value proposition of your idea or business plan, and how does that compare in a relative basis to the comps in that particular industry, or if it's a completely new idea, simply what is the projected returns um, based on a proper mathematical basis in terms of, what is your projected revenues, what's your projected cash flow. Let's assign an appropriate multiple to that, and let's take a look if that's realistic, and then how much money are you willing to give away of that capital for that company. And it's probably at the earlier stages you want to give some away to somebody that's got experience in that sector, that could help be a mentor to you more than anything else as you take on some capital and grow that business. Otherwise, if you can, take out a personal loan on your credit card from a bank, home equity line of credit. Don't worry about dilution, okay? And just be able to service that. Obviously, it'd be good if you could service it out of the proceeds of your company, but that's unlikely. So you're probably going to have to fund it from yourself. But that's better in the initial stages because you're only accountable to yourself. Once you require, though, that 1.5, 2.5, 5 million capital, you obviously need to raise that from others. So you really want to be invested with people that are invested in you, believe in you, and are going to want to give you the advice you need. And that's not necessarily a friend or a family. At that stage, you're talking about somebody that could be a mentor in that company and is willing to give capital to it. You could talk about, Kyle, crowdfunding and other ways to do that, but you're still beholden to stakeholders in doing so and capital dilution. So you want to try to keep it as close to home as possible so that you are the master of your own destiny until the company gets to the stage that you need outside capital. You need outside capital, see if you can get a bank loan with some personal guarantees, borrowing your credit cards. Once you get that, you show real skin in the game. Then a venture capital firm, a smaller family office would be more interested because you've actually committed yourself, committed capital, you have skin in the game. Some of your friends and family have skin in the game. Somebody's likely to come in. And at that point, it's a valuation argument. It's a risk-adjusted return argument. And those valuations, you could assign a realistic conservative multiple with a downside and upside scenario to it.
It's a great point, Peter. And quickly, what's maybe one of the biggest mistakes that companies tend to make at their early stage when looking for fundraising or looking for funding, even if the friends and family round or to typical investors the like? What's one of those biggest mistakes that you've seen or heard about?
I think the biggest mistake, and I think you'd see that if you watch some of the shows on Shark Tank, is you've got a great idea, okay? And what you think is a great product, whether that's a digital product, it's a software, hardware, it's AI, crypto, whatever, okay? It's still a product, okay? And you think that product or service solves a significant problem, okay? But the rest of the world doesn't think it's needed or solves a problem. And therefore, you have no sales. So if you're going to go out and look for outside capital based on an idea, that'll never work. You have to have a product or service that has been tested in the market, and that you're solving a specific niche that people are willing to pay for that service or product. If people are not willing to pay for that service or product, okay, then there's no valuation that can be ascribed to it, and it will fail. And that also means you need to have a team of advisors, mentors, etc., that'll help give you real advice, whether that product is needed and there is actually an end use for it.
No, that's a great point. And Peter, I want to come to you for closing thoughts. And today I got 3 things for you. So 1, closing thoughts and advice, anything left for those companies looking for funding. 2, a book recommendation that you'd like to give for those out there. It could be about anything. It could be about venture. It could be about anything that you recommend. And then where can everyone find you?
Okay. So first of all, start backwards. So you can find me on WhatsApp. You can find me on LinkedIn. You can find me at the Weimer Family Office. I also have a website, peterplout.com. So you can see a little bit about myself, my family, my trials and tribulations. That's all out there. In terms of a book to read, I'm not going to just talk about one book to read. I think when you're looking for capital, the best thing to do, okay, is really just scan articles in angel investor magazines, venture capital magazines. Look at on the Wall Street Journal, look in trade magazines for the industries you're in, and find out what the trends are in your particular sector or industry. Be an expert on what those recent trends are, what people are thinking about, what the negative views are. Join a WhatsApp group in your particular industry. Join a group on LinkedIn, but learn about the supply chain and in terms of your specific industry and focus on that. Leave these big sales pitches and how to raise capital and stuff like that and raising capital for dummies. Forget all about that. Focus on your particular industry and being a real specialist in the industry in terms of not just about your particular product, but what people are saying about your industry. And you'll I would also say, look for what people are saying, what articles are out there. That's the best, in particular in the trade magazine point of view. In terms of thoughts to leave, we had a short session today. I think the most important thing I'd leave people with in terms of this, how to find capital. Capital is readily available, but it's not readily available based on just a great idea. You have to have a product or a service that addresses a specific need, okay? And that need has been tested, not just because you think it's a great need, but because you've tested it on not just a few friends, but people that are going to give you good advice. So find, in terms of those trade magazines on LinkedIn or somebody in the group, find somebody that's successful. Successful people always want to help others, okay? They want to give back. Reach out, find a mentor, find a rabbi to help you on your journey. That's the best advice. Have a rabbi, have a mentor to give you true advice. If you can get that true advice, and by the way, listen to the talks here on LA Token from myself and some of the great speakers that you have here. We're always talking about every week, almost every day, about the trials and tribulations, about entrepreneurs in various industries, in various spaces. And if you don't know where to go, you're just completely lost, reach out to me, reach out to Kyle. Okay, we'll put you in touch with people that'd be more than happy to give you some of their thoughts and in terms of their challenges, their failures, their successes, and how they've overcome them.
Thank you very much, Peter. Nothing else to add on my side. That was absolutely wonderful. Audience, you heard it first. With that, if you like today's episode, make sure you click like, share, and subscribe to the channel. And also check out thetoken.com to hear from Peter, myself, and other speakers of the VCTV family. Big thank you to the Token team, to Maria and Hasmik for making today's episode possible. With that, Peter, have a wonderful day. Audience, you as well. And we'll see you back here tomorrow.
Thanks, Kyle.
Take care, everyone.